my friends traders. Caroline Alizan here, graduate student of the Grok Trade Mentoring Program. It is Monday, July 18th of 2011, and we're looking at the Q's daily chart. Hope you all had a wonderful weekend and you're all back in the game and ready to do some technical analysis here with me. So let's do it now. Check this out, guys. Look what we see here on our chart. What a beautiful pullback to that lower area support, actually, which we talked about last week, which is at the 50-day moving average. This is this red line right here, which is the 50-day moving average, and it's sitting right at the 56.84 mark. So we are beautifully pulling back down, stopping at this 56.84 mark because it's a significant area of support. So once we broke through the 8 moving average, then we entered into a bearish territory. That's what I mentioned to you last week, and we're still sitting there in a bearish territory below the 8 moving average. This is all according to the 8 moving average, which is pointing lower, which is not a really good sign. So what else do we see here? We see a really nice low base formation right here forming at the bottom of that low pullback at the 50-day moving average. Actually, between the two in here, between the 8 moving average as well as the 50-day moving average, we're stuck between those. We are trapped inside the moving averages, which I don't really like. I don't like to see our formation stuck between the moving averages. But that's what we have here, and we need to consider it and just take a look at it technically to see what could happen in here. So what we need to pay attention to tomorrow and the rest of this week is a breakout through the high of July 13th, which was at the 58.34 mark, as well as the low of July 14th, which was at the 56.87. Again, the high of July 13th, which was at the 58.34, as well as the low of July 14th, which was at the 56.87. So put these low lines in here so you know exactly what's happening when we get close to it. Once we get close to it, then we will need to look for a breakout on a pretty decent volume in here to the upside. If we ever get a breakout to the upside through the high of July 13th, again, the 58.34 mark, and then once we close above it, we could head all the way back up to that next area of resistance right here, the 59.05 mark, actually the 59.05 mark, and then we could head all the way back up to that high of July 7th, which was at the 59.36. So that's what can happen in here. Or we could pull back down again. We could break back to the downside, breaking through the low of July 14th, which was at the 56.87 mark, continuing lower, breaking through that next area of support down below the 56.65 mark. And then once we do that and close below it, we could head even lower to that next area of support on our way down here, the 55.84 mark. And then the next big and major one would be at the 200-day moving average, which is sitting right at the 55.58 mark at this point in time. And it's here in blue. So that's this blue, bright blue line coming up a little bit here, pointing higher. So that's what you need to really pay close attention to if we ever head lower. And check this out. Look at the MACD. The MACD is still pointing lower. It's resting a little bit here at the 0 line, but it's still pointing lower. So once we break through that 0 line and we actually go to the other side of the 0 line, we would enter into bearish territory. So whatever we see here on this chart needs to confirm with the MACD. So if we had lower on our chart, if we break through a significant area of support on pretty decent volume, and then you see the MACD breaking lower, breaking through that 0 line, entering into bearish territory, that is a good sign. So everything would line up then. So we would be good to go, but you need to really look for confirmation. So again, pay close attention to all areas of support and resistance that I showed you here today, and also look for confirmation with the MACD. So have a wonderful day, and I'll talk to you again tomorrow.